Hey guys, how are my lovely market victims doing today? We got hit hard today, we got bent over and spanked throughout the entire day. Interestingly enough, today we saw a lot of really important developments take place across all sectors of the economy. I have so much to say that it is not even worth doing an introduction on it. As such, let me just say this: we are going to talk about AMC, NFTs, GameStop, banks, inflation, Evergrande, Chinese real estate sector, and all the people who were clowning me for disagreeing on two particular subjects. Though it is better to usually ignore all the naysayers, today we are going to take joy in dunking on them hard. I am not holding back on anything today, so buckle up because today's video is going to be majestic. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Let's begin with the big news making headlines all across the world media. Evergrande has defaulted on their debt, according to Fitch Ratings. Now, for some odd reason people have been going all out making this seem as if it is breaking news, when we have been talking about it for weeks now, already knowing that legal procedures were taking place in Hong Kong. I informed you guys as to what this means for Evergrande, and that the media has been lying to you about their default for weeks. Trust me, all the folk at Fox and CNN and MSNBC and the rest knew for a fact that Evergrande had defaulted weeks ago. We went over the legal documents, we went over the testimonies of big institutions saying they never received payments weeks ago. The media just decided it was convenient for them to announce it now, sourcing their news on Fitch Ratings, because it probably granted their owners, who are financial institutions like hedge funds, some time to probably prepare and pull out of many investments that might have been impacted. There is nothing new or breaking today in regards to Evergrande. All that happened was Fitch Ratings downgraded Evergrande and its many subsidiaries to restricted default, meaning that the firm has failed to meet its financial obligations, and the media used this as the signal to stop playing games and finally call things for what they are. As I said, when it comes to Evergrande, what you need to know is that the Chinese government is working behind the closed doors with the company to assess the damage and soften the blow it will have on the rest of the real estate sector. China made it impossible for Evergrande to come back through restrictions in order to force the company to fall so that they can redistribute portions of the company to other smaller ones, encouraging a more balanced and shared real estate instead of having one giant corporation own so much leverage and have so much power. Short term, this could have serious ramifications for the global economy, but in the very long term, economically speaking, this action will bring prosperity to the overall health of Chinese economy. As for what this means for the short term though, Evergrande's collapse imposes a serious risk of contagion across the entire Chinese real estate sector. We have already seen two other big companies, Sunshine 100 and Fantasia, default as well. The fear is that this will continue spreading out and inevitably cause a full market collapse. I will keep updating you guys as the situation continues to develop, but nothing big happened today. The American news just decided to make this official, that's it. JP Morgan is now in the business of selling a product and service to institutions like hedge funds so that they can find a way to doge meme stock shocks. JP Morgan Chase is testing a new research product to guard big clients from losses linked to the meme stock phenomenon that had Wall Street and all other shorters at losses over $10 billion as of last month. Naming it the Through the Retail Lens, this product serves as a screening tool that compiles datasets on retail investor trends. It apparently provides predicted retail flows, significant buy and sell signals on single stocks, negative or positive sentiment based on banks' internal data and scouring of social media forums, especially of Reddit and Twitter. I know this all sounds complicated, so let me smooth it out for you. What JP Morgan did was create a computer algorithm that measures how much talk there is about a particular stock at a given time. If they start seeing that more and more people are talking about a specific stock, this algorithm will also indicate what position the user should take. This is nothing new, as I have already seen groups of people using similar algorithms, especially on subreddits like Wall Street Bets, that measure stock symbols and the volume of chatter going on around them so that they can take positions in anticipation of large droves of people buying. JP Morgan said in a statement, and I quote, "If you don't have a clear view of what retail is up to, it feels like you're driving partially blind." JP Morgan simply wants to piggyback off on retail investors who have found a way to beat hedge funds and other institutions. If you are upset at this, don't. Like I said, plenty of other big investors already do this and have similar tools that measure ticket chatter. The only way to truly beat hedge funds at their game is when retail traders band together to buy and not sell. When shorters take positions against stocks but people keep accumulating shares, you guarantee a squeeze. This isn't just me saying this. I have made videos going over posts and interviews by hedge fund managers also saying the exact same thing. JP Morgan is still a trash company whose consistent acts of criminality against the market and their own customer and clients stain the foundations of the capitalist society we live in, and they should be liquidated and eliminated with all the present and past board members prosecuted and jailed to the fullest extent of the law. But since we live in America, where this kind of behavior is rewarded, we give them a pass. Inflation, what seems to have become my favorite segment on this channel, is not doing any better today. In fact, today reports came out stating that the new forecast for the month of November is about 6.8%. If this is true, if we reached 6.8 inflation for the month of No Nut November, this will be the highest inflation has been in the lifetimes of most Americans. This comes as a shock, especially when you think back to last year, when economists were forecasting a 2% inflation shock for this year. What an absolute slap on the face to all Americans, to all citizens of the world. Do not for 1 second, for 1 moment, believe that this is not hurting people. Choices between paying for Christmas gifts or paying for gas are being made right now by millions of people. Paying rent or paying for food, paying the loan or paying for electricity. These are hard choices that have been forcibly imposed on the lives of countless people around the world, all because the Fed, led by the most criminal mastermind of modern history, Jerome Powell, decided to isolate Wall Street from any repercussion or damage by the onset of the pandemic last year. You don't get to eat this Christmas, or perhaps not get to buy enough presents, or pay your loans and credit cards, because the rich belligerent self-righteous scum of the earth had to make a couple extra $1 trillion in profits this year. Do not go to sleep tonight before remembering that while the whole pandemic destroyed or crippled the 99%, the 1%'s net worth surged by 70% during this last year to a total of $5 trillion. Sleep on that tonight and keep it in mind when the media blames you for being a poor sport and blaming Wall Street for the way things are. And being honest with you, the shock that this level of inflation is having in America is not being felt anywhere near where it will be in a couple months' time. When I tell you to get ready for a full roller coaster ride, I am not using hyperbole to dramatize the effects. Google inflation on your spare time and look at what economists are saying about where all this will end. Be sure to secure your investments, because you might be left with nothing by the time this all crumbles down. Let's talk about AMC and the NFTs. I got clowned really hard about 2 weeks or so ago when I said NFTs are not the path for AMC. That it was just a spur-of-the-moment hype brought about by a man named Mark Cohodes who came out of nowhere and people started idolizing for no good reason. His words somehow became scripture overnight, and all AMC shareholders needed to follow it, for if you didn't agree, you were a shill. Adam Aron made a public statement today which reads, NFTs are a super idea, but not a 1 per share security token NFT dividend, as repeatedly described on Twitter. It is likely illegal, breaches our debt covenants and exposes AMC to huge litigation risk. We can't do it. Beware of concepts that sound easy and too good to be true. This is literally exactly what I said on that video, and I got the boot by a small but loud demographic of viewers. Today, I clown on all of you calling me names and making me out to be a shill. Adam Aron speaks strong, and in this message lie some truths that will be said about the AMC community that I will not hold back. The AMC investors are strong, and some of the most charismatic and wholesome individuals I have come across in my entire life. The communities formed around this stock is just amazing, seeing the quality and growth in maturity from so many, but there is still a lot of room for improvement as individuals. Some have flocked to AMC stock and made it their entire personality, and have little understanding of what markets and regulations are. They simply invested in AMC, decided to follow a couple bigger names and get a sense of entitlement, oftentimes making statements so ridiculous even Adam Aron is telling you to step back. AMC is a big company, and it has a duty to appease and make good on its investors' returns. However, AMC does not have to do and follow every new trend that its investors try to make it follow. The truth is that AMC has a serious debt issue going on right now, and many forget about this. Though the future for AMC brightens each day, it is still in a tight spot. As such, as I have tirelessly said a million times over, the path forward for Adam Aron will be to take advantage of its popularity by introducing new products and services that will enrich its revenue streams. They need money, and they need to capitalize on this opportunity to try to establish great programs, venture into blockchain technology, expand its business to mass produce and sell its popcorn outside theaters, among other things. AMC needs new ways to bring in money. By enriching its cash flow, it will attract more and more investors, as well as continue to make great progress on paying off their debt, which is the most important financial responsibility AMC has right now. And that is what I want to stress. AMC has its priorities straight. Its goal right now is paying off that huge looming debt they have, not cause a squeeze. The squeeze will happen, but it will not be artificially manifested by AMC itself because a couple angry people on Twitter are tired of holding. I have said many times, meme stocks are not a quick way to become rich. If that is what you were after, I recommend you to go on Wall Street bets and throw all your money at options and gamble it. You will most likely lose all of it, but in the event you hit it good, you will have made a good return. If you are here for real life-changing money, for growth, you need to ease off on the bullying, ease off on trying to subjugate AMC to meet your capricious demands which you have no real understanding of, and you need to chill. Furthermore, I will note that some, not all, but some AMC investors have this weird need for approval. They have this almost pathological for having a celebrity figure continually tell them to invest and what to demand of their theaters, and it goes to show that the sum of this portion of people do not know what they are doing. They have not done their homework, they have not done due diligence, they have not taken the time to learn about AMC and basic business practices and performances, they have not taken time out of their day to study what they are investing. They are on the go to do whatever person they like the most tells them to. If this is you, you need to stop what you are doing and make time to inform yourself on your own investments. This codependency of celebrities to validate your every decision is only going to negatively affect you and the group. Take Mark Cohodes, the weirdo who came out of nowhere and established himself as a stock guru, thinking himself better suited to tell Adam Aron what needs to be done, and the amount of people that followed and copied his behavior. Mark Cohodes is like me, he is a nobody. He wants to force AMC to do something that is not beneficial for the company right now because he wants a good return on his investment. Well, to him and the rest of you who agree, AMC does not answer to you and your petty demands. AMC is a solid business at a pivotal turnaround moment. Adam Aron knows exactly what he is doing, and as he clearly showed, he will not be bowing down to investors who think it would be so easy for AMC to launch an NFT and some dividends. The company is filled with debt and already you want to starve it of much-needed cash flow so that you can get some dividends. Mark Cohodes blocked me today after I called him out on his ridiculous response to Adam Aron's statement on NFTs, showing the man has no room to argue his point validly. I called this to be the best approach weeks ago. I think I was the only one who did with a substantial following. I am so happy that AMC went public about this and made a statement on this issue, sourcing their decision on the same arguments and points I made. Again, it's okay to disagree. We all differ on so many subjects, and sometimes it takes time for us to switch opinions. It's simply the natural course of life. This message is not for you. This is for the clowns that decided to make posts on Reddit and Twitter and even my YouTube section trying to get others to rally against me, calling me a shill and make an attempt to bully me. Just so you know, if you think that has any sort of mental effect on me, please reconsider your approach. If social media ever gets to me, I simply switch off the app and go outside. I encourage you to do the same, perhaps talk to a girl and make some friends. Some of you are so down in life and it really shows by how petty and self-destructive you come across when faced with a different opinion. Last thing I want to touch on AMC, which also kind of builds up on GameStop, which I will talk in a minute, is the surprise and astonishment I have seen from people seeing that I actually say days are bad. I think it shocks some of you that I can say expect bad things to come because so many others pump stocks every day. I have gotten many people who disagree with me on this, citing that this can only scare people away from stocks, but I don't care. I will 100% always be honest with you. When the market is going to be red, I am not going to sing praises. I will say get ready to go under and see your account in the big negatives. I will be honest and genuine with you because guess what? I am holding and see red numbers just like you. I have no reason to lie, misrepresent or undermine the current situation. The economy sucks, the markets are tittering on life support, GME and AMC are going to be weak for a while. I have been saying this for weeks already, since we were still green and high. I told you expect bad days to come and expect it to last weeks to months, and here we are. Expect nothing but my honest opinion. I do not care about appeasing weak-minded people and comforting them by lying about what they want to hear. If so chronic your fear of a dip is, please refrain from investing and give thought to what you are doing, because this isn't close to where markets could be if inflation and Omicron keep on progressing the way they are. Lastly, I want to talk about GameStop really quick. The earnings report was very positive. The only entities I see saying the earnings report was bad was the media, which was expected, and some people who never even invested in GameStop in the first place but can't seem to go anywhere else. The earnings were very bullish in my opinion, and shows that GameStop is indeed coming back strong. The greater than expect loss per share came as a result of GameStop deciding to spend money in its inventory and expansions as a way to make sure they can meet the growing demand they are seeing. If you think about the early days of Amazon, it was the same premise, albeit to a larger extent. Amazon was running at a loss for almost 10 years or so because they were expanding and putting all the money they made into ensuring its future, and now look at where they are. GameStop showed stronger sales number, showed more traffic on their website, showed that they have a multitude of projects going on in the realm of blockchain technologies, and showed that they have a war chest worth over $1 billion of cash which will allow them to keep running their business and stay afloat for years to come in the event they were at a loss. The only part where I see room for improvement in the way they carry out their business is that I feel a very palpable lack of enthusiasm from their board. Maybe Adam Aron and AMC have spoiled me, but I wish they had a closer relationship with its investors and would take time to answer questions and be more energetic. I have no problems with any of their management, in fact, I absolutely adore their board members, but the way they go about their investor relationships leaves much to be desired, especially in a time where retail investors own the majority of the float and are passionate about GameStop. Aside from that, carry on as usual. GameStop is safe. GameStop is stronger than it has been for years and GameStop is going to the moon. That's all that has to be said. I know what I said today will not be too popular with all, and many will take it to heart and become agitated and hurt. I understand that, and know that I stand by my statements even then. If this is where we must part ways, I wish you the absolute best moving forward. Simulate and trade will remain in the realm of facts and realistic expectations, not uncanny appeasement for the weak and troubled. Expect the best of me moving forward as I continue to get better at this. Let's now talk about today. The Fed submitted over $1.500 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 66% of the total volume today, while dark pool trades for GameStop accounted for 42% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing almost 9% for the day. The stock was brutalized today and there are no words to ease this off. It began trading relatively neutral during the pre-market. Upon market opening, AMC ran from 31.35 to 32.95 on the upper band of the VWAP. However, shorters were going to take hold of today's performance, and began dipping the stock pretty much for the entirety of the rest of the day. AMC closed at 29.46, way below the VWAP. It's crazy to me how consistent shorters are in maintaining the price of AMC and other meme stocks subjugated at or below the lower band of the VWAP, which is a technical characteristic I had never seen before. The manipulation is so strong right now, they are taking advantage of a weak market, so take advantage of them and get a discounted tendy. As for tomorrow, AMC will find support at 27.74, 27 and 26. Resistance will be met at 30, 30.70, 31 and 32. Tomorrow is Friday, and it is obvious shorters want the price under 30.01, so what do you say we give them a hard time? Buy the dip and hold it. GameStop traded bearishly, losing over 10% for the day. I can't believe GME reached 151, but here we are. AMC opened to a small run that took it to 172. After this brief surge, GameStop would retrace through most of the day until close to market's closing. It dipped and reached 151. After this dip, GameStop would bounce back with general weakness, closing at 155.76, below the VWAP. As for tomorrow, GameStop will find support at 151, 148 and 144. Resistance will be met at 159.85, 161 and 163. They want this price underneath 155 by the end of normal trading hours tomorrow. I plan on getting some extra tendies. Thank you all for watching my video. That is all I have for you guys today. Big shout out to all the people watching my morning videos. Believe it or not, those videos take the majority of my time. I will link my morning video in the comments below for those that missed it, as it is a very important video. Let me know what you think of the video. If you want to support this channel, I have a Patreon link in the description, as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day and to the moon.